Hi there, Serial Trader here. Just going to have a look at the major US indices now that we've had a couple trading days this week to examine. And so far, two positive days in a row. But now we're kind of running right into this daily T line, which has served as good resistance during the downtrend. So we'll see if that continues to be the case. Now, at this point, there's nothing. We've also filled this gap from last week as well. So maybe we just came up to close the gap, test the T line, and then we're going to roll over again. That's kind of what I'm favoring, but certainly I'm not discounting the possibility of further, at least near-term upside as well. But that being said, I'm still favoring that overall the downtrend is going to continue, and we're going to either come down to the equality relationship in a C wave, which will be below 2,500 here, or really break down in a third wave, which will be around 2269 if we get that 1618 relationship. But shorter term, things are a little less clear at this point. And right now I just kind of have some minor wave labels up, one down, two up. Maybe we're still working this wave 3 in progress, minor wave 3, but we're subdividing. So I'll go in a little closer time frame there, just to examine that. So here's just the hourly chart of SPX, and this is from our nice pivot up here above 2800. So I like that we have a wave 1 down, wave 2 up, and that's minor wave 1 down, minor wave 2 up, and maybe now we've done a 1 down and we're working on another 2 up, which will be the subdivisions of minor wave 3. Which would make perfectly good sense because often wave 3 extends. It's the longest, tends to be the longest wave in a sequence, more often than not. So it's certainly possible that, okay, we've done our initial impulse down 1, 2, and now we've just done another 1. We're in the midst of just doing this 2, looks fairly mature. And I've just put some Fibonacci retracement levels of this leg down here, and we haven't quite hit the 50% retracement level, which would be at 2689. The 618 would be at 2702, which also happens to be another hourly resistance level, which came in right at 2701.96. So right around that 2700 area, there's some nice resistance on the hourly chart, and that's also the 618 retracement of this leg down here. Just kind of on an even shorter term basis, if you look at the price action, so this looks nice and impulsive to the downside, corrected to the upside. Impulsive trending to the downside, and look at this. We're just choppy, overlapping waves. So this looks very corrective in its structures, which makes me favor that we're just going up in this little wave 2, and that'll give way, once it completes, to coming down in a, third wave 4 or 5 to complete the minor wave 3, and then do another 4 or 5, and then that'll maybe complete our C wave or our third wave, depending how low it goes at that point. So this is still the favored outcome here. I'm not seeing anything to really discourage me as of yet from leaning in towards this bearish count, although that could certainly change. But just as of right now, as of current price action, it has not changed. My outlook remains largely the same here, other than some short-term, nuances on the minor wave counts here. Now, that being said, so let's just go back to this chart here. So let's just pretend that we have found some sort of significant pivot down here, and we did make a higher low above the October 29th low here on SPX. Now, I don't favor that, as I've just described, but let's say that's how it plays out. Well, what else could be going on? Would that turn me into full bullish mode? Well, we've had our correction, and now we're just going to head straight up. No, not at all. And I'll actually kind of show you what I'm thinking. So I'll get rid of some of the wave labels here. Just clean things up a bit. Okay. So nothing's going to change my mind that we do have a 5 down from the all-time high to the October 29th low. That just counts so nicely as 5 waves down. And nothing's going to change my mind really that we have a nice three-wave corrective advance that came up to that. Let me just grab the fib pole tool here. That came right up to that 618 retracement level, right? So that's all still intact. Nothing's going to change that. That's already in the past, so that's already a pattern that exists and implies more about the future pattern. So now the only question is, are we just coming down right away simply in our next impulse wave down? And that's obviously what I'm favoring. But if that's not how it plays out, what else could be going on? Well, I mentioned before that I like that we went up to that 618 retracement and that previous fourth wave, a nice resistance level. So as far as price goes, we did a perfectly acceptable corrective rally for that. But as far as time went, we consumed well over a month in our initial wave down, and I think we only consumed maybe around 9 days or so on this move up. So I was concerned that there wasn't enough time corrected despite the price correction being acceptable. So what other pattern would kind of allow for that to be the case? Well, let me kind of show you what I pointed out before, and also some other ones. So this is just a simple zigzag, but as we know, corrective patterns can develop in various ways, a zigzag being one of the most basic of them. So there's also the possibility that we did ABC up, okay, but now we've just done A, B, C down, okay. I made a higher low, so I'll show you where I'm going with this. So we could have a zigzag up for wave W, a zigzag down for wave X, and come up again in a zigzag for wave Y. And let me just straighten out the degrees here. Yeah, so this should be minor, and these would actually be minute. So the larger wave 2 could be developing in a more complex manner. And let me just throw some fib relationships up there. So W and Y would be tending toward equality in the most common relationship. And then another relationship would be just the 618. But the 618 would only bring us up to 2761. So likely we'd be going towards that equality relationship in this scenario. So that would bring us into that 2842.70 level to the upside if this is what's playing out. Keyword if. And let's see how that would line up with the 786 retracement. So it would be in between the 618 and the 786 retracement of this overall 5 waves down. And let me just bring up this so we could still have our 1 down, 2 up, and then I'll just put these over here. And intermediate wave 1 down, and then W, X, Y up for wave 2. And let me just illustrate the other little ABC up. ABC up like that for wave Y of 2. So this is a very possible scenario. But I'm not going to embrace it until I'm given a reason to, and a good reason would start to be, getting over above the T line with some sort of follow through, but we're just not there yet. But if we do, this is kind of what's going to be in play here, or a possible scenario that's in play. Another scenario, and I'll just get rid of this once again. So maybe we are doing a triangle wave B, because it could also form a triangle in the wave B position, and that would give us some more information. So that would imply that we just have an A down, we're working a B wave, and we'd be coming down in that larger C wave. And I'll clean this up, make that intermediate, get rid of the line here. Okay, now let me clarify here. So still ABC up and ABC down, but in a different wave pattern altogether. So we could have A, B, C, D, E. We got a contracting triangle potentially, right? So we did our ABC up for A, did our ABC down for B. We need an ABC up for wave C, ABC down for wave D, and then E, and that would be for that larger B. So this overall A, triangle B, and we'll be coming down in 5 waves again for wave C, maybe to the equality relationship. So this is another potential scenario, right? The keyword is, or the key message is, we don't know yet. But given the current information, I'm still going to favor just my more basic scenario that we're just coming down in a 5-wave sequence. And I've been given no strong technical reason to change my mind yet. But I'm just laying out some other possibilities as far as wave counts and wave patterns that could form. Both the double zigzag, the WXY, and this ABCDE triangle wave B are both very viable scenarios at this point, at least as long as we continue to hold the October 29th lows intact here. And okay, that's kind of all I have to say for now on the wave count. So yeah, still overall just favoring this more straightforward interpretation that we're just 1, 2, and then shorter term 1, 2, and then we're working our 3 of 3 down soon. Although it has to cooperate pretty soon for me to embrace it and stick with it. Okay, now that's probably good for these wave charts. So let's go to the thinkorswim candlestick chart. So at this point we've had 2 up days, 2 green days. We did get into the oversold condition on the daily oscillator here, and now we're starting to come off of that. So that's slightly bullish as far as that goes, but that alone is not enough for me to change my mind. We basically come up right to the T line. We closed slightly above it today, although not overly convincing yet. And I'll show you what I mean on the other indices. I like to see all 3 indices kind of confirm with one another. So far, all you can really say is we've closed the gap from last week, that gap down. We've basically come up to the T line, and now we're waiting to see what happens. Do we get follow through and develop this corrective pattern that we're in from the October 29th lows in a more complex fashion, or do we just stall at the T line as we have multiple times before during this downtrend and start going back down to challenge the lows? That's really the question at this current juncture, and we should know the answer. I would say this week we should know that we're either going to be heading higher here or rolling over right away. Time will tell. All right, so that's good for SPX. Now, before I go to the other indices, something else I'd like to touch on. And let's see. Do I have the SPY chart set up the way I want it to be? Yeah. Go the daily here. And okay. So I just want to point out the low volume. Because okay, on a if we're really going to start some sort of more significant rally here, you'd like to see a little volume behind it. Well, as you can see, the just looking at the SPY ETF volume, it's pretty low today. Certainly in the lower end of the range that it tends to be in. So I'm not seeing a whole lot of conviction here on this rally. So that's a knock against further near-term bullishness here. Another thing, I'll just quickly go to this FinViz I like to have a look at. So look at today. Now this is the total advancing decline issues on the New York Stock Exchange, the Nasdaq, and the American Stock Exchange. So despite having a overall positive day, at least on the Dow and the S&P, the Nasdaq was basically flat. We had 59.3% of all issues declining versus 35.9% of all issues advancing. So that's over 4,000 declining versus under 3,000 advancing. So not particularly strong for a supposed bullish day. And we had 400 new lows being made versus 32 new highs being made. And it's not looking very good as far as market internals confirming that, okay, yeah, we're really going to take off here in some big rally. So there's that. Back to the thinkorswim chart here. So I just thought I'd point that out, just separate from the wave count and the candlesticks and everything. Now back to SPX. I think we're done with SPX here for now. Maybe I'll just go with a 10-minute chart quickly just to kind of show what I'm looking at here. So since our low from last week there, I mean, does this look like a really impulsive trending advance? Not really. It kind of looks like a choppy, I mean, we had this nice little gap up here, but now we've just been choppy, overlapping, struggling to make higher highs and higher lows. So it is a technical uptrend, but it looks like a very weak, meandering one. It looks very corrective, okay? It doesn't look like a nice flowing, trending 5-wave advance to me. Okay, and I think we'll move on to the other charts now. Now on the Nasdaq Composite, or no, sorry, the Dow Jones Industrial Average, we'll do that first. So as we know, the SPX is basically at or slightly above the T-line as of today's close. The Dow closed still below its T-line. And now the Dow has put together 2 green days in a row. But again, the last time we put 2 green days in a row and basically fell at the T-line, that was just another setup for further weakness. So let's see if this continues that theme or if we actually get something more sustainable upwards. So far not above the T-line though, so I'd be very suspicious of further near-term strength. Now the Nasdaq Composite also failing roughly at its T-line, and at this point the Nasdaq basically showing largely the same pattern, although we did take out the October 29th low on the Nasdaq, whereas we didn't on the other 2 indexes. But the thing is, you could still have a A, B, C, an expanded flat, wave 2 for the Nasdaq, or you could have an A, B, C, D, E for a triangle, because B is allowed to make a new extreme in a triangle, and then come down in a C wave on the Nasdaq. So it is a slight difference from the other 2 indexes, although it doesn't really change anything as far as being directionally aligned with them. So yeah, Nasdaq basically right at its T-line, which has been serving as resistance the whole way down as well. So we'll see if that continues. It would be a somewhat notable change if we get above the T-line and close above the T-line more convincingly on all 3 indexes. That would change at least the near-term bearish outlook, but again, we're just not there yet. We'll see what tomorrow brings and the rest of the week. Now let's see if the volatility index is giving us any clues. And VIX appears to be making a higher low, so we have a little uptrend here in VIX that started from the low here at 1609. So we had a high, higher low, higher high. Looks like we're trying to set another higher low, which would be anything above 18.1 would be a higher low on VIX. We've gone as low as, let's see, 1867 and 18.7 today. So VIX still hanging on to a little short-term uptrend, not very clear. It might be a little bit more significant if we do break below this level on the VIX, 1609. That would probably be at least short-term bullish for stocks, and obviously if we break above this high, that likely means we're heading lower in another leg down on the stocks. But here VIX just kind of in the middle of its range, although hanging on to a little uptrend. So we'll see how this plays out throughout the rest of the week as well. Now as far as myself, I haven't made any changes to the put back spread that I have for SPY, although I'm certainly ready to do so. The time decay hasn't really become a major factor yet, although it will start to be in the not so distant future. So if we don't find some resistance here soon and start rolling back over and looking for lower lows, if that doesn't happen, if we actually get a bit more of a sustained rally, I'll likely just close the back spread and look to just do another position when it sets up nicely for it. But haven't made any changes yet, although I'm ready to do so. So that's just the update for now. All right, Serial Trader signing off.